Good morning, guys. Let us continue with our discussion of transfer pricing better. We ended the previous class with question number 24, guys. Now we will start question number 25. Let us finish question number 25, 26, and then come to the other questions. Question number 25, guys, now. Achha. XYZ Limited has two divisions, A and B. Division A makes and sells product A, which can be sold outside as well as be used by Division B. A has a limitation on production capacity that only 1200 units can pass through its machining operations in 1 month. On an average, about 10% of the units that A produces are defective. It may be assumed that out of each lot that A supplies, 10% are defectives. So these 10% are uniform. It is not that only a particular lot of 120 units are defectives. It is that if you're manufacturing 10 units also, out of those 10 units, 1 will be defective, 9 will be good units. So 10% defective rate is uniform. It is not that a particular lot only is defective. When A sells in the outside market, the defectives are not returned since the transportation costs make it uneconomical for the customer. Instead, A's customers sell the defectives in the outside market at a discount. But when B buys product A, it has to fix it into its product, which is reputed for its quality. Therefore, B returns all the defective units to A. A can manually rework the defectives, incurring only variable labor costs and sell them outside at 150, and not having to incur any selling cost on reworked units. If A chooses not to rework, it can only scrap the material at 30 rupees per unit. B can buy product A from outside at 200 rupees per unit but has to incur 10 rupees per unit as variable transportation cost. B can insist to its outside suppliers also that it will accept only good units. So there's a lot of information given here, guys. It says better, when you are selling in the outside market, you do not have to worry about the defectives. The defectives will not be returned. That means you are going to get revenue for all the units, including the defective units. When is this going to happen? When you sell in the outside market. But when you're transferring to your own division B as such, guys, when division A transfers to its own division B, guys, defectives would be returned. Defectives would be returned as such, guys. So there beta, with those defectives we have two options. Either we incur certain amount of labor beta on it and sell those defectives at 150 rupees per unit, or scrap the material at only 30 rupees per unit. We will see which among these beta is a more viable option. Which among these beta is a more viable option. B can buy product A from outside at 200 rupees. That is your maximum transfer price as such, guys. You know better that B is incurring effectively 210 rupees when it procures from the outside market. B is effectively incurring 210 rupees when it is procuring from the outside market, guys. So that would become their maximum transfer price. A incurs a variable selling overhead only on units other than reworked units sold outside. The following figures are given for the month. Variable cost of production, guys, department A is 120 rupees. Variable selling overheads are 20 rupees. Selling price per unit in the outside market is 200. The current selling price to B is 190 rupees. Additional variable labor cost of reworking defectives is 100. Selling price of reworked defectives is 150 rupees. Fixed cost for the month are 36,000. Maximum demand from B at present, but a number of units is 630. The outside demand can be freely had up to 900 units. Given the demand and supply conditions, you're required to present appropriate calculations for the following. Evaluation of the best strategy for A in the present condition. Evaluation of the best strategy better for A in the present condition. The question is pretty interesting as such, guys. Why, I will tell you, but you will have to go through the question. I'll tell you better why as to this question is interesting. तुम लोग पहले go through करो बेटा question. All of you guys go through the question. Yes, beta. Do go through the question, guys. I will tell you why the question is very interesting. पहले question पढ़ो, guys. Better, that's a lot of time for you to read the question. One thing you have to understand better in this question is that the question is from the viewpoint of division A. First important point. The very first important point that I want you to understand better in this question is that the question is from the viewpoint of division A, guys, not from the viewpoint of division B. Look at the requirement again, guys. It says evaluate the best strategy as such better from the viewpoint of division. Question के बाद जो लिख सकते हो बेटा, this is from the viewpoint of division A. You can write beside the question, guys, that the decision making is from the viewpoint of division and not from the viewpoint of the entire company. Goal congruence की ऐसी की तैसी. Goal congruence as such better might not be relevant. Goal congruence as such, guys, here will not be relevant because the decision is from the viewpoint of the company, from the viewpoint of the division. Write that clearly better. Decision is to be taken only from the viewpoint of, is to be taken only from the viewpoint of division A. Decision is to be taken, guys, only from the viewpoint of division A and not from the viewpoint of the company as a whole, and not from the viewpoint of company as a whole. Undoubtedly better the company as a whole might lose if we take a decision like this, but then they did not ask us that better. Decision is to be taken only from the viewpoint of, first important point but of this question is this only, that the decision is to be taken from the viewpoint of division A and not from the viewpoint of division B. Previous question, guys, we took decision from the viewpoint of division X, but then we still took maximum transfer price, guys. That is still better taking decision from the viewpoint of company. Yes or no? Yes, sir. तो यहाँ पे बेटा the current transfer price to division B is 190 rupees, which should be considered for decision making, The current transfer price to division B beta is 190, which should be considered for decision making. दो maximum transfer price beta, दो maximum transfer price is 210. The effective procurement cost for division B from external market. The effective procurement cost beta for division B from the external market. समझ में आ रहा है? हाँ सर. This should have been, guys, you should have taken decision on the basis of 290, guys, but then no, we are not going to take decision on the basis of 210 beta. Sorry. We are going to take decision, guys, only on the basis of 190. We are going to take a decision, guys, only on the basis of 190, guys, and not on the basis of 210. I hope you're all clear about this. Yes, sir. Please remember this part, but this might result in incorrect. Can result in suboptimal decision making. Or suboptimum decision making. I hope you all wrote this point, guys. I hope you all wrote this with me, guys, that the decision is to be taken from the viewpoint of division A and not from the viewpoint of the company, guys. This is why beta your current transfer price to division B, guys, is 190, will be considered for decision making and not, guys, 210 rupees. Okay, sir, we have all written this. Now beta, if you look at the production capacity of this firm, beta, The production capacity, guys, is 1200 units. 1200 units. Our maximum external demand beta is maximum external demand. The outside demand can be freely had as such beta up to the maximum external demand is 900 units. Can be freely had up to 900 units, guys. Defectives will not be returned. Defectives will not be returned as such, guys. Please do not forget that. Defectives will not be returned. Therefore, beta good plus defective units only is 900. Good plus defective units are equal to 900. You do not have to worry about defectives there, guys. But as far as internal transfers are concerned, guys, as far as internal transfers are concerned, internal transfers beta. Internal transfer mein beta the demand for good units beta should be considered as the demand for good units as such, guys, should be considered as 630. That means therefore beta your gross production as such beta for this should be 630 divided by 90% beta, that is 700. So only if you transfer 700 as such beta out of this good production as such beta would be 630, and your poor quality beta, that is defectives as such, guys, would be 70. That means for you to effectively transfer beta 630 good units to the other division as such, guys, you'll have to actually manufacture and sell them 700 units. You will have to actually manufacture and sell them 700 units. So in spite of that, they will return 70 units, guys. They will return 70 units. Understood, sir? They will return 70 units. Do not forget beta that if you're transferring it to your internal division, they are going to return the defective. They're going to return the defective. If you sell it in the external market as such, guys, there are no returns of defectives. I hope you're all clear about this, guys. I'm just going to wait for 10 seconds so that you can all write this point. I've already given you time beta to write the above point. Yes, guys. Now if you look at the next one as such beta here, ये तो हो गया बेटा सबका. Now guys, I will have to decide what is the effective contribution per unit beta from external sales, what is the contribution per unit from internal transfers. First important thing beta here is, if internal transfers are made, I do not know beta whether I'm going to make them or not, but if internal transfers are made beta, defectives returned by division B can be treated in two ways. Defectives returned by division B beta can be treated in two ways. What are those two ways as such, guys? The defectives returned as such beta by division B can be treated in two ways as such, guys. Option 1 beta is to rework them. Option 1 beta is to rework. Option 2 as such beta is to simply scrap them. Simply scrap them. So if I rework them as such beta, I'm going to get a revenue of 150 rupees. If I scrap them, I'm just going to get 30 rupees. My rework cost as such beta is 100 rupees. Question mein diya hua hai beta, you can see that your additional variable labor cost of reworking defectives is 100 rupees. On reworks as such beta, there is no external variable selling overhead. Variable selling overhead is only on external sales other than reworked units. Do not forget beta, your original manufacturing cost already incurred. The variable cost of production beta already incurred is 120 rupees. The variable cost of production, guys, already incurred is 120 rupees. Let us not forget about that part. You might say beta that it is irrelevant for decision making. ठीक है beta, ले लो. But when I compute profitability statement, guys, I will have to take that. Yes or no? So my contribution per unit beta is negative 70, negative 90. Please understand, guys, that there is no variable selling overhead on reworked units. There is no variable selling overhead on reworked units. You tell me guys, what is the company likely to do? Will the company guys rework the defectives as such guys, or will they sell it at scrap? Sir, the answer is, sun lo beta, I'll give you time to copy. The answer is very clear, sir, here on the basis of the calculations that you have presented, that the company is going to rework defectives. Company beta is going to rework defectives. Yes or no? As the loss is lower, rework defectives. Correct, sir. Now guys, I will have to compute effective contribution per unit beta to decide what should I be giving preference to. First thing, but I've decided whether the company is going to rework the defectives or whether the company is going to simply scrap the defectives. Is the company going to rework the defectives or is the company going to scrap the defectives guys? We have presented that beta properly here. Now beta, the next thing is what is to be done beta is computation of effective contribution per unit guys, to decide what are you going to give preference to. Contribution per unit. Computation of contribution per unit guys from external sales and internal transfers. Internal transfers will have both good units and defective units. Good units and defective units. I hope this part is clear guys. First, in case internal transfers are made, division B is going to return defectives. If they are going to return defectives as such guys, I will have two alternatives. I will have to either rework the defectives or I will have to sell them as scrap. If I am reworking the defectives as such guys, my loss beta would be 70 rupees per unit. If I am selling them as scrap, my loss would be 90 rupees. I will obviously want to minimize my losses guys and incur a loss of only 70 rupees. And that is where beta will say that we will rework the defectives. We would rework the defectives. External sales guys, हाँ अभी ये देखो guys, in case you sell in the external market, your revenue per unit beta is 200. Internal transfers, good unit 190. Defectives as such guys, we know beta that we are reworking 150 rupees. We rework as such beta and that is 150 rework. Yes sir. Our manufacturing cost per unit beta will be incurred for everything. Doesn't matter whether you're selling in the external market beta or whether it is internal sales. There is variable selling overheads beta that will be incurred only on external sales. There is variable selling overheads beta that will be incurred only on external sales guys. Selling price per unit, current selling price to be additional variable labor cost, selling price of rework defectives. Your rework cost as such beta that we are incurring is 100 rupees. Now guys, if you look at the contribution per unit, if you look at the amount of contribution per unit guys, here I'm going to get 60 rupees. Here I'm going to get 70 rupees. Here I'm going to get negative 70 rupees. Wait guys, before you jump to conclusions. Do not forget guys, for every 10 units transferred, as such guys, 9 beta would be good units. For every 10 units transferred beta, 9 would be good units and 1 beta would be defective. 630 minus 70 divided by 10, 56 rupees. I'm just writing here beta, for every 10 units transferred, there will be 9 good units beta, 9 good units and 1 defective. So from 9 good units, you will not say I will transfer only good units and sell defectives in the external market. You do not know which is a defective guys till the consumer is using it. Do not come to those guys, amazing ideas. So यहाँ पे guys, your average contribution per unit is 56 rupees. Average contribution per unit beta is 56 rupees. So undoubtedly you're going to give preference to external sales, but this is where beta this is going against decision making. If I would have considered a maximum transfer price of 210 rupees instead of 190 guys, I would have given preference to internal transfers. If I would have considered guys an internal transfer price of 210 and not 190 guys, I would have given preference to internal transfers and not to external sales. The company as a whole beta is actually losing out if you give preference to external sales and not to internal transfers. The company as a whole is losing only because you're giving preference to external sales guys and not to internal transfers. Are we understanding this? Yes sir, we're all understanding this. That's nice guys. Now you will copy both of them guys, because we know what are we going to give preference to as such beta, and I'm also going to give you a note. Then we'll directly allocate our production capacity and then yes beta, we're done with the answer. We are done with the answer. A simple question guys. Answer के बाद beta questions become simple. after you look at the answers as such, guys, the questions become simple. But remember, guys, in the examination, the real struggle is to interpret the question in the right way better and then attempt the answer. For that, you should have, inculcate a habit, guys, of reading the questions on your own. This is where, but if I give you 10 minutes to read the question, utilize those 10 minutes properly, understand each and every word. Nahi, pause the video, take more time, doesn't matter. Right now, what is important, beta, is that you are understanding the subject. You're not finishing classes for the heck of it. Are we clear? Yes, sir. Let us all copy this, guys. Now, if internal transfers are made, what can you do with the defectives? And then beta, you will write contribution per unit, and then beta, we will allocate production capacity. Okay, sir? Yes, sir. Please do this, guys. करो बेटा जल्दी. Yes, guys, I hope you're all done with this. Let us write a note, beta. Division A will give preference. Division A beta will give preference to external sales. Will give preference to external sales. Out of the remaining capacity, out of the balance beta, out of the balance capacity, internal transfers will be made. Out of the balance capacity, internal transfers will be made. Internal transfers will be made. Are we clear about this? Yes, sir. We are very clear about this. So guys, division A beta will give preference to external sales, and out of the balance capacity as such beta, internal transfers will be made. Note guys, note. Decision is not from the viewpoint of company. Decision is not from the viewpoint of company. This is not required in the examination guys, but still write beta. Is not from the viewpoint of the company. Why isn't the decision from the viewpoint of the company as such guys? Remember guys, the maximum transfer price should have been, maximum transfer price is 210. If 210 is considered as, if 210 is considered as transfer price, if 210 is considered as transfer price, is considered as transfer price beta, then guys preference will be given to internal transfers. Preference beta will be given to internal transfers. Preference beta would be given to internal transfers guys. If you take the 210 rupees guys, the decision would have been totally different. ठीक है? Yes sir. We are all clear about this. If they would have asked us beta as to what would have been, you know, the minimum transfer price is such beta, it was the decision will not change, at which they will be indifferent is such beta between outside selection and this. Minimum transfer price is such beta to be indifferent. ये just अपने understanding के लिए बेटा, this is not required in exam. All of this is not required in exam. If they would have asked us guys as to what is the minimum transfer price as such beta, to be indifferent as such guys. The effective contribution per unit from internal transfers should also be 60 rupees. The effective contribution per unit from internal transfers should be 60 rupees. Yes or no? So I will say beta 9 units into X rupees. I do not know what is the contribution. 1 rupee into negative 70 divided by 10 units should give us 60 rupees. 670 divided by 9. That X beta should be 74.444 rupees. Though this should be contribution per unit from good unit. This should be contribution per unit beta of good units. We all know guys, variable cost per unit as such beta is 120. Therefore beta, your transfer price per unit should be 194.444. At 194, this is the minimum transfer price guys, at which he will be indifferent. He will be indifferent as such guys between external, indifferent beta between external sales and internal transfers. So that even your internal transfers as such beta are giving you the same amount. Yes or no? But we know guys, the other division guys is ready to shell out, 210 rupees as well, is ready to shell out 210 rupees as well. ये लिख लो guys अभी सब लोग, and then we will write the allocation of production capacity. All of this is not required in the exam, this computation of 194.44. They did not ask us, we are just doing it for the purpose of our understanding. Just in case he wanted to be indifferent beta between internal transfers and external sales, and this is what you are supposed to do. This is not even the true minimum transfer price as such guys. Let us remove the word minimum. This is not even the minimum transfer price, because we do not have external demand equal to 1200 units. We do have a spare capacity guys. And in case you have spare capacity as such beta, you know that your minimum transfer price is only variable cost per unit. This is just to be indifferent beta between giving preference to what. If I were to give preference beta to internal transfers, then minimum transfer price should be 194.44, so that I get the same contribution per unit. Understood sir? Please write this guys, and then we will attack the question. We've been attacking the question only guys. I hope you're all done with this, guys. नहीं हुआ तो pause करके copy कर लो, guys. Pause करके copy कर लो. Now, guys, allocation of production capacity. यहाँ तक बेटा, all of this is not required in the exam. ठीक है? All of this is not required in the exam, guys. If you talk about the allocation of production capacity as such, beta, allocation of production capacity, this is what they asked us, beta, evaluation of the best strategy for division A. Evaluation of best strategy, beta, for division A. तो यहाँ पे guys you will have available capacity as such, guys. Available capacity is 1200 units. First preference as such, beta, is obviously being given to external sales. External sales as such, beta, would be 900 units. And the balance as such, beta, would be internal transfers. Internal transfers. Out of this internal transfers also, beta, we know that only 270 beta would be good units and 30 beta would be defective units. Yes or no? Yes, sir. Now, if you want to compute total contribution and total profit, guys, did they ask us to compute? No. अच्छा, same level of profit compute करना ही है वैसे भी. Second bit में same level of profit है, guys. So if you talk about total contribution as such, beta, total contribution, you can either multiply, guys, with effective contribution per unit. This external sales, but I can directly write 900 units into 60 rupees per unit. I'm writing contribution beta here. Internal transfers as such, guys. For good units, I can write down 270 units, guys, into 70 rupees. For the defectives as such, guys, I'm going to write 30 units into negative 70. Sir, can I directly write 300 units into 56? Yes, beta. You can directly write 300 units into 56, beta, even that would do. 300 units into 56. Remember, guys, the effective contribution per unit is that only. This is 54,000. This is 270, 300 into 56, guys. Effectively 16,800. So put together, guys, our contribution is 70,800. Less the amount of fixed cost as such, beta, is 36,000. So the amount of profit that we are making, guys, at present is 34,800. This is the allocation of production capacity, guys, and we making profit here. 34,800 rupees. 34,800. Are we clear about this? Yes, sir. Please make a note, guys. Allocation of production capacity, guys. Make a note. Yes, beta. I hope you're all done with this. Look at the second bit, guys. We can all do it collectively. If B can buy only up to 540 units and the outside demand beta is only 600 units, how much should A charge to maintain the same level of profit as in one above? So guys, B outside demand is only 600 units, but the entire question has changed now, and the division B as such guys will buy only 540 units. So you'll have to maintain the same amount of profit, guys. So basically, beta profit should remain at 34,800, which implies beta contribution should remain at 70,800. Should remain at 70. So your profits are going to remain at 34,800 guys only if your contribution is going to remain at 70,800. Yes or no? Yes. So for this to work out as such beta, for this to work out first, what did I tell you guys? यहाँ पे क्या दिया हुआ है? Sorry, external sales as such beta is only going to be external sales as such beta are only going to be 600 units. Internal transfers beta of good units. Internal transfers of good units as such beta. Whatever internal transfers beta should be of good units only. Which means your gross production guys. Your gross production as such beta should be 540 divided by 90% beta 600 units. Out of that beta there will be good units beta 540, and then beta there will be defectives guys 60 units. We do not know the transfer price guys. Your objective is to compute transfer price guys so that we generate the same amount of profit. Do not take transfer price at 190. This is just a normal bit guys now. Do not take the transfer price beta at 190 rupees as such guys. Transfer price is missing. So now what will you do beta is required contribution. Required contribution. Yes sir, required contribution is 70,800. Correct sir? Yes sir, required contribution is 70,800. Out of this sir, what is a contribution from external sales? Contribution from external sales. The amount of contribution beta from external sales. The amount of contribution guys from external sales is 600 units. 600 units multiplied by the amount of contribution per unit as such guys from external sales is 60 rupees. So that would be 36,000 guys. 36,000. What is the balance contribution? It's a coincidence beta that it is equal to the amount of fixed cost. ऐसा कुछ नहीं है. What is the balance contribution beta from internal transfers? The balance contribution beta from internal transfers should be 70,800 minus 36,000 beta 34,800. What would be the contribution from defectives guys? When you rework defectives and sell them as such beta, so you're going to incur a loss. You are going to incur a loss, and that will be 60 into negative 70 rupees, negative 4,200. So what should be the contribution from good units? Contribution from good units beta should be, I should not only recover 34,800 but also recover 4,200. That is 39,000. From defectives I would be incurring a loss of 4,200 beta. From good units I have to realize a contribution of 39,000. So contribution per unit beta from transfer of good unit. Effectively guys, I'm supposed to generate that 39,000 from 540 units. 39,000 beta I'm supposed to generate from 540 units, that is 72.222222. Therefore guys, my transfer price as such beta should be 72.22222 plus 120 rupees variable cost. So that is 192.22222. This is the answer guys. You will have to transfer internally at 192.222 for your profits to remain same. No decision making guys, it is just taking the profit as per requirement 1 and recomputing it. I hope you're all clear about this. I hope you're all done with this part guys. अगर ये पूरा क्वेश्चन हो गया ना बेटा, if you're all done with solving the entire question, you can obviously move on to question number 26. You can proceed to question number 26 beta. Yes guys. Yes guys, I hope you're all done with this. कर रहे हो ना? इतना तो हो गया ही होगा कब का. Here guys, if you're not done with this, please pause and copy. I've given you a lot of time guys to understand and interpret the question. A lot of time has been given guys to understand and interpret the question. I hope you're all clear about this better. Cholo guys, I'm assuming that we're all done with this. Let us do the next question guys, question number 26. I hope you're all done with this better. Opticals Limited makes two kinds of products, P lenses and Q swimming goggles, in divisions P and Q respectively. P is an input for Q and 2 units of P are needed to make 1 unit of Q. Obviously beta you will need 2 lenses to make 1 glass. Yes or no? The following data is given to you for a period. Direct materials beta for P it is 20 rupees, 30 rupees is direct labor, variable overhead is 10 rupees. So yes boss, our variable cost is 60 rupees. External demand is 3000 units when we have a capacity to manufacture and sell 7000 units. This our price to the outside market is 100 rupees. Price to the outside market beta is 100 rupees. Division Q guys has a material cost of 25, direct labor of 35 guys, and variable overheads of 20. All of this is excluding P guys. Remember they need 2 units of P. Let us not forget that. So 25, 35 it is 80 rupees plus 2 units of P. 80 plus 2 units of P. Their external demand is 3000 but capacity is restricted to 2500 as such guys. So obviously but the production should be constrained to 2500. If production is constrained to 2500 beta, the requirement of P guys would be 5000. They would be needing 5000 units. If Q buys from outside guys, it has the following cost. If they order for less than 2499 units, they will have to pay 90 rupees per unit. If they order 2500 to 5000 units, they will have to pay 80 rupees. And if they order more than 5000 units as such guys, they will pay 70 rupees for the entire quantity ordered. You're required to evaluate the best strategies for divisions P and Q. Explain briefly the concept of goal congruence. Second bit is a theoretical question, guys. They're asking us to explain the concept of goal congruence. We have been doing this right from performance measurement and evaluation. Correct, sir? We've been doing it. So, guys, you tell me, beta, how are we supposed to evaluate the best strategies for divisions P and Q? For divisions P and Q. Let us see, sir. You will read the question, guys, and I will write the given information, and then we will collectively evaluate the best strategy for division P and Q. Yes, guys. Yes, beta. Did you all read the question? Yes, sir, we did. Now, guys, so let us see, beta, what is that we are supposed to do. Best strategies for division A and division P and Q. पहले तो बेटा there's nothing much that we can do for division Q, guys, because we will assume बेटा that his maximum requirement he is going to procure from outside market. That itself beta would be the price that is willing to pay, guys. That itself is the price that is willing to pay to division P as well. Division Q, guys. Division Q. Please do not forget beta, what is their production, guys? Their production capacity, guys, is 2500 units of Q. 2500 units of Q, guys. External demand is 3000. Sun lo beta. External demand beta is 3000 units of Q. Yes. So guys, obviously beta production will be restricted. Production beta and sales will only be, production and sales beta will only be 2500. Will only be 2500 units. Therefore, beta, the requirement of component, requirement of product P will be how much, beta? Requirement of product P. You need 2 lenses to make a goggle, beta. So that will be 2500 into 2, 5000 units. You would need 5000 units of PSH, guys. Just to be clear, guys, remember if they buy the entire quantity of 5000 units from the external market, they will have to shell out only 70 rupees. Now, if you get a doubt that no, sir, if it is exactly 5000, they will have to pay 80 rupees and not 70 rupees. Let them buy, guys, 5001 unit and throw that 1 unit. Okay, far more cheaper. Now, instead of buying 5000 units, at 80 rupees, and paying 4 lakhs, we can buy 5001 units, at 70 rupees. So let us not forget, beta, the maximum procurement cost. Let us not write off that as a buildup. I'll write closing inventory 1 unit. You want to throw it, you can throw it, guys. Maximum procurement cost, beta, for division Q. The maximum procurement cost for division Q cannot exceed 3,50,000. Cannot exceed 3,50,000 rupees. 5000 into 70, beta, I'll keep a closing stock of 1 unit. Or you can write 3,50,070 rupees, guys, doesn't make a difference. But yes, beta, the maximum procurement cost for division Q cannot exceed 3,50,000. Do you remember, beta, we did a question the other day? Yes, sir. In case, beta, your supplier, in case the receiving division, guys, has different purchase prices, in case the receiving division has different purchase prices as such, guys, then he will say, okay, you, how much ever you want to transfer, you transfer, but then my overall cost cannot go beyond this level. My overall cost cannot go beyond this level. Yes or no? Yes. Now, if you talk about division P, beta, please understand, guys. Sun lo, beta, I'll give you time. Production capacity, guys, of division P, beta, is 7000 units. Correct, sir? External demand, beta, is 3000 units. External demand is 3000 units. No doubt about it, guys, that they will transfer. External demand is 3000 units. Or 2 options are available, guys. 2 options. Sell 3000 in the external market. 3000 in external market. And transfer 4000 units to division Q. Second alternative, beta, is to sell 2000 only in the external market. 2000 in external market. And transfer 5000 units. Transfer 5000 units, beta, to division Q. We will see which of these 2 alternatives is a better alternative, beta. We will see which of these 2 alternatives. मतलब यहाँ पे क्या करना है बेटा? If you transfer 4000 units to division Q, they will have to procure 1000 units from the market at 90 rupees. So that means they will give you a maximum of only 2,60,000 for the remaining 4000 units. They are going to give you only 2,60,000 for the remaining 4000 units. So you'll have to evaluate whether it is beneficial or not. Write this, guys. I hope I've made the information very clear, beta. We still have to present the answer. This is just writing the given information, guys. And of course, understanding the question in a little bit. ये कॉपी करो बेटा सब लोग अभी. All of you guys copy this. सब लोग बेटा कॉपी करो ये. Yes, beta. I hope you're all doing it. Yes. Here, beta. Are we all done with this, guys? Here, beta. ठीक है. I hope you're all done with this. Now I just have to know better as to what would be the transfer price in case I transfer, guys. Whatever alternative one, guys. If 4,000 units are transferred, we will all present the revenues, guys. Don't worry. 4,000 units are transferred better to division Q. Do not forget, guys. Division Q will have to purchase. Division Q will have to purchase 1,000 units from external market. Will have to purchase 1,000 units better from external market. From external market. At, if they purchase 1,000 units, but it will be at 90 rupees. Check their better purchase slab rates. Check their purchase slab rates, but it is going to be 90 rupees as such, guys. Let us not forget better that their maximum procurement cost, the maximum procurement cost as such better cannot exceed 3,50,000. They have an alternative of purchasing all the units better at 3,50,000. What is the procurement cost better for 1,000 units? Procurement cost of 1,000 units as such, guys, is 90,000 rupees. So this beta balance, this is the maximum transfer price or the maximum consideration beta. This would become the maximum transfer price, guys. 2,60,000. I would say beta per unit that would be 2,60,000 upon 4,000 units. 65 rupees. Sat correct beta. Alternative 2, guys. If 5,000 units are transferred, guys, then guys, your maximum transfer price beta would be their external procurement cost. Maximum transfer price beta would be equal to their procurement cost, and that is beta 3,50,000. That is 3,50,000. We will now see beta as to what is better, guys, for division P. Should they transfer 4,000 units, guys, or should they transfer 5,000 units? By comparing their revenues, you can also compare their profitability statement as such, guys. But then, anyways, beta, your variable cost is going to remain constant. Your variable cost. Let us not forget, beta, variable cost per unit of division P, guys, at 60 rupees. So yeah, because That variable cost is anyways constant, guys. You can take a decision either on these basis, some basis. ठीक है? So we'll compute profitability statements. ये सब लोग लिख लो guys. Alternative 1 and alternative 2. What is the maximum transfer price? We did this earlier as well, guys. We will now compute profitability statements, guys, of division P and Q. We will now be computing profitability statements. We will be preparing profitability statements to decide what is a better alternative for these entities. Copy कर लो बेटा सब लोग. Yes, beta. Here, guys. I hope you're all writing. Or you're computing on your own. Yes, guys. I hope you're all clear about this. Now, profitability statement, guys. Profitability statements. Statement of division P. There are two alternatives, guys. Alternative 1, alternative 2. What would be the revenue beta from external sales? You can all do it with me, guys, quickly. Revenue beta from under alternative 1, guys, you're selling 3000 units in the external market at a price of 100 rupees. 3000 units are being sold, guys, at a price of 100 rupees. That is 3 lakhs. Here, guys, alternative 2, only 2000 units are being sold at a price of 100. That is 2 lakhs. Internal transfers, guys, 4000 units at 65 rupees. 2,60,000. And here, guys, 5,000 units at 70 rupees. 3,50,000. We've already reached to conclusion, guys. Alternative 1 is better because the revenue is more. अभी इसके आगे नहीं करेंगे तो भी चलेगा बेटा, because anyways variable cost would remain same. Variable cost beta would be 7,000 units multiplied by 60 rupees. 4,20,000, guys, in both the cases. 4,20,000. So our profit as such beta would be 1,40,000 and 1,30,000. Profit, guys, would be 1,40,000 and 1,30,000. Understood, sir? Therefore, beta, division P should sell 3,000 units in external market, 3,000 units beta in external market, and transfer 4,000 units to division Q. Transfer 4,000 units to division Q, guys. This is what you should do. Division Q, guys, Remember beta, profits will not change. Profits will not change. As procurement cost as such beta is remaining constant. Yes or no? Procurement cost is constant. There is nothing better that we are actually procurement cost is constant. Division Q beta is basically procuring. Will procure 4,000 units. 4,000 units from P. From division P. And this is at 65 rupees, guys. And 1,000 units beta. Procure 1,000 units from external market. 1,000 units beta from market at 90 rupees. This is what they will do, guys. Understood, sir? In case division Q is not procuring from division P beta at 65 rupees, company as a whole will lose. In case division Q beta does not procure from division P, company as a whole beta will lose. Company as a whole will lose 5 rupees. How, sir? This is just for our understanding as such, guys. Minimum transfer price beta will be variable cost because it is out of surplus capacity. 60 rupees, guys. Out of spare capacity. We are meeting the entire external demand as such, guys. Only if there is spare capacity, we are transferring to the other division. Maximum transfer price beta we've already computed, guys, based on external procurement cost is 65 rupees. This is the answer. Yes, sir. I hope you're all clear about this, but I did profitability statement of these divisions, guys, and then we also arrived at what is better from the viewpoint of division Q and this decision. Second bit जो है बेटा goal congruence, this is just a theory concept, right? Normal theory बेटा. Goal congruence explain करना. Theory normal, guys. How will you explain goal congruence? Every decision बेटा that the division manager is taking as such, guys, should be in line with the objectives of the organization. It should result in optimum allocation of the resources of the organization as a whole, guys. It should not result in suboptimal decision making. Should not result in suboptimal decision making. Clear, sir? Copy this, guys. In case you're not done with this, copy this. I'm going to wait for 2 minutes and then we're going to start the next question. Meanwhile, but if you're wondering which question next, even I'm wondering, let me check. We will not start 27, 28 yet, beta, because I have to explain dispute settlement transfer pricing. I'm not done with that yet. We will be doing the 22nd one beta after this. We will be doing the 22nd one beta after this. Yes बेटा, चेक करो गए सब लोग ये. Yes beta, I hope you're all done with the profitability statement. Write this, guys. Write this beta. Yes, beta. Yes, guys. हो गया ना सबका? हाँ सर, बहुत ज़्यादा टाइम दे दिया है आप. Because I've given a lot of time as such, guys, we will now proceed to the next question. Guys, याद रखना guys, even if I'm not giving homework questions, you can always solve additional question bank. You can always solve additional question bank. Transfer pricing has a lot of questions, guys, at the end. Around a lot of questions, matlab around 6-7 questions, guys. You can always practice them better. And one day before the examination, guys, as I told you, better strictly stick to those questions better that have ICI, SM, or the attempt or the RTP or MTP mentioned against it. Yes, sir. Loud and clear. Question number 22, better. A company has two divisions, A and B, making products A and B respectively, guys. One unit of A is an input for each unit of B, guys. It has a production capacity of 45,000 units in ready market. Other information available regarding division A beta are capacity, guys, production in units are 50,000. Remember, B has a production capacity of 45,000 units. Our capacity beta is 50,000 units. Maximum external sales are 30,000 units. Fixed cost up to 30,000 units beta is 4,30,000. Beyond 30,000 units beta, it increases by 50,000 rupees for every additional 10,000 units. Your variable manufacturing cost is 55 rupees. Variable selling cost beta, external sales is 10 rupees. Variable selling cost per unit for special order or transfers to B beta is 5 rupees. Selling price per unit in the external market is 80 rupees. Selling price per unit beta for special sales is 70 rupees. B can buy input from outside at a slightly incomplete stage at 45 rupees per unit, and it will incur subcontracting charges of 30 rupees per unit. Division B is willing to pay a maximum of 75 rupees per unit if Division A supplies its entire demand of 45,000 units. However, if it supplies lesser quantity, Division B is willing to pay only 70 rupees per unit. Division A also has received a special order of 15,000 units, which it needs to either accept in full or reject. Division A may choose to avoid variable selling cost of 5 rupees per unit on transfers to B or special order, guys, by incurring a fixed overhead of 50,000 rupees per annum instead. Loud and clear, sir. Now, what I want you to understand, beta, is the question. I have understood the question, guys. You will have to understand the question. I'm going to wait for 2 minutes, beta. Read the question properly, guys. Read the question properly. Did you read the question, guys? Did you all read the question? Yes, sir. I'll just wait for 30 more seconds, guys. Hello, guys. We are good to go. In case you haven't read the question yet, as such, guys, in case you need more time, you know better that you can always hit the pause button, guys. It is not that you will have to actually wait for me. First thing that you will have to understand better is the decision, guys, is from the viewpoint of division A, not from the viewpoint of company. Leave everything aside as such better. The decision is from the viewpoint of division A, guys, and not from the viewpoint of the company. Yes, sir. Now, if the decision is from the viewpoint of division A, guys, we know, guys, that division B is actually incurring a cost of 75 rupees per unit, guys, if it procures from outside market. So that should have been the maximum transfer price. But in the given case, better maximum transfer price would be 75 per unit only if you meet the entire demand of 45,000 units. If you meet anything lesser than that, as such better. If you meet anything lesser than that, guys, then no, we are not going to. He is not going to give us 75 rupees. He's going to give us only 70 rupees. Can result in suboptimal decision making. Yes or no? Yes, sir. Can. Capacity as such beta is 50,000 units. Capacity of division A is 50,000 units. Your external demand as such beta. External demand is 30,000 units. There is a special order, guys. There is a special order of 15,000 units. Do not forget, beta, the special order of 15,000 units should be accepted in full or rejected in full. Either you accept it or you reject it. And then, beta, there is this internal transfer. Internal transfer up to 45,000 units. External demand also, beta, you can say is up to 30,000 units. Not necessary that you will have to cater to the entire external demand, guys. Not necessary that you will have to cater to the entire external demand. So this is clear, sir. Division A has a capacity of this. One thing, beta, that I will have to understand, guys, is that one thing, beta, that you'll have to understand, guys, is that variable selling cost का भी बोलूँ नहीं. The decision, guys, is from the viewpoint of the division A as such, guys. So you will take the transfer price that is quoted as such, beta, and not what should have been the transfer price. What should have been the transfer price? Let us write that point, beta, first, and let us, guys, make it very clear that okay, we are thinking only from the viewpoint of division A. We are not thinking from the viewpoint of the entire company. We are not thinking from the viewpoint of the entire company, guys. लिखो बेटा सब लोग ये. Write this, guys, first. Division A capacity is 50,000 units. So we have options available are the external demand beta is 30,000 units. Special order beta is 15,000 units. And then internal transfers is up to 45,000 units. In case you either transfer the entire 45,000 units or you transfer, guys, something lesser than that. Or you transfer beta something lesser than that. Okay. Yes, sir. Clear. Clear, sir. तो यहाँ पे क्या लिखोगे बेटा? What will you write? I hope you're all done with this, guys. Write down better. The decision is from the viewpoint of, first important. The decision is from the viewpoint of division A. From the viewpoint of, guys, इसका answer जब original when this was included as an example, guys, in ICS study material originally, the answer was wrong. And I was like, nahi, that is not the right answer. बच्चों को बोलता था. And students will be like, sir, ICI का answer है, sir. Don't you think we should do this only? And then they changed the answer, and then I was like, don't you think you should do this only? Guys, the decision beta is from the viewpoint of division A. From the viewpoint of division A, guys. Hence the transfer price quoted should only be considered. The transfer price quoted should only be considered. Should only be considered. The transfer price quoted should only be considered. कितना है बेटा वो? Which is 75 rupees if entire 45,000 units are transferred. 45,000 units are transferred. And 70 rupees if less than 45,000 units are transferred. If less than 45,000 units are transferred. Understood, sir? If you see, guys, the external procurement cost, this is just for our understanding. All of these points that you're not supposed to write in the exam. The external procurement cost for division B is 75 rupees. So for decision making from the viewpoint of company, the maximum transfer price better. The maximum transfer price should be 75 rupees irrespective of the quantity. The maximum transfer price should be 75 rupees. Transfer price should be 75 rupees. Irrespective of the quantity. Irrespective of the quantity, guys, the maximum transfer price, guys, should be 75 rupees. Are we clear about this? Yes, sir. Loud and clear, sir. No doubt about it. ये लिखो guys, important है बेटा, that we are taking decision only from the viewpoint of division A, guys, and not from the viewpoint of the entire company. That is why whatever is the quoted market price, guys, quoted transfer price, we are considering that only. I hope you've all written it, guys, because you were supposed to do it with me only. Now, guys, there are few important points that I will want to clear beta first. First important thing beta is that will you want to increase the capacity as such, guys, to 50,000 units? Will you want to increase the capacity to 50,000 units? Just say you know better that up to 30,000 units you'll have to anyways incur a fixed cost of 4,30,000 rupees. If you want to go beyond 4,30,000 units, for every 10,000 units you'll have to incur additional 50,000 rupees. So is it worthwhile to go beyond 10,000 units? One thing is for clear, guys, that the variable cost per unit manufacturing cost is only 55. Even if I consider variable selling overhead, I will not consider, I know, guys, but even if I consider variable selling overhead of 5 rupees, my variable cost as such beta would be 60 rupees only. So the minimum contribution that I'm going to get beta, is around 10 rupees. Bare minimum, guys, even if I consider variable selling overheads. As such beta, I'm going to get a contribution of 60 rupees. समझ में आ रहा है sir? हाँ sir. So guys, first decision regarding you know, guys, increasing capacity, decision regarding beta incurring additional fixed cost. Is it worthwhile? Do you have to incur additional fixed cost? So guys, your variable cost of manufacturing is 55 rupees. Variable selling cost, guys, is 5 rupees. So for internal transfers or special order, guys, I'm just giving you a rough calculation, guys. This is not the exact calculation. Your variable cost beta would be 60 rupees. And you know beta selling price or minimum transfer price, guys, even if I transfer less as such beta, it would be 70 rupees. So the minimum contribution that I'm going to get beta is minimum contribution per unit that I'm going to get is 10 rupees. From external sales, guys, I'll get a contribution of 15 rupees. From external sales beta, the contribution per unit is 15 rupees. I'm just writing this beta here. From external sales, the contribution per unit beta is 15 rupees. ये जो है बेटा अपना जो अभी अपन लिखेगा इस मिनिमम कंट्रीब्यूशन पर यूनिट 10 रुपीज. दिस इज आफ्टर कंसिडरिंग वेरिएबल कॉस्ट. दिस इज आफ्टर कंसिडरिंग बेटा वेरिएबल सेलिंग कॉस्ट. So one thing is for clear, guys, that from every 10,000 units I'm going to receive, guys, a contribution of much higher than beta 50,000 rupees. The cost of increasing capacity by 10,000 units beta is 50,000 rupees, and the amount of contribution that I'm going to get, sun lo ghado, the amount of contribution that I'm going to get beta is much more than 50,000 rupees. Even if I increase my capacity from 30,000 to 40,000 units, the minimum incremental contribution, guys, from every 10,000 units is going to be 1,00,000 rupees. The minimum incremental contribution, guys, incremental contribution from 10,000 units, beta, will be 10,000 into 10, guys, 1,00,000 rupees. Whereas the additional fixed cost beta is only 50,000. So what am I supposed to do? Very clear, sir. Capacity will be increased to 50,000 units. Okay, sir. You will not stop beta, you will go till the maximum extent possible, 50,000 units. So this is the decision that I've taken regarding additional fixed cost. Usko goli maro. Now beta we know guys, therefore total fixed cost beta would be 4,30,000 is up to 30,000 units. Incur additional 50,000 units beta for additional 10,000 units. Incur additional 50,000 rupees beta. So this would become 5,30,000. This is up to 30,000 units. And this is beta for additional 20,000 units. Your total fixed cost as such beta is going to be 5,30,000. Understood sir? This is the decision regarding the additional amount of fixed cost beta. और एक छोटा पार्ट है बेटा, you can copy both of them collectively guys. हो गया बेटा question. We are almost done with the question guys. If you talk about decision regarding, look at the next page as such guys. It says that you can avoid incurring a variable selling cost of 5 rupees per unit on internal transfers or special order guys by incurring a fixed cost of 50,000 rupees. Decision regarding incurring fixed selling overheads in place of variable selling cost of 5 rupees on internal transfers or special order. The next decision that we are going to take beta is this decision regarding incurring fixed selling overheads in place of variable selling cost beta of 5 rupees on internal transfers or special order. ये तो था beta decision regarding additional fixed cost. Very clear? Yes sir. Now this is decision regarding incurring fixed selling overheads beta in place of variable selling cost of 5 rupees on internal transfers or special order. Okay sir. So what am I supposed to do sir now? देखो guys, I am talking about the worst possible scenario. Remember beta that your maximum external demand beta is only is 30,000 units. Yes or no? Yes sir. Listen guys, your maximum external demand beta is 30,000 units. 30,000 units guys. We all know guys that our capacity is 50,000 units. Now the minimum quantity guys, beta for internal transfers or special order, this is minimum beta or special order, will be 20,000 units. Now this is why minimum as such guys, that is even if preference is given to external sales. Who knows beta preference will not be given to external sales? But anyways beta minimum quantity for internal transfers or special order beta will be 20,000 units. Even if preference is given to external sales. And we know beta that we are going to produce all of this. So if variable selling cost beta of 5 rupees per unit is incurred, this is only on internal transfers guys or special order. If variable selling cost of 5 rupees per unit is incurred guys, our minimum selling cost beta on account of internal transfers and special order will be 20,000 units into 5 beta 1 lakh. Now don't you think guys it is better to incur a fixed cost of 50,000? Nice question right guys? Yes sir. It is better to incur a fixed cost of 50,000 guys instead of variable selling cost, because if you incur variable selling cost, I am not telling you it is going to be exactly 1 lakh. It can be much more than 1 lakh. Imagine guys, what if you are transferring 45,000 units to the other division? If you're transferring 45,000 units to the other division guys, then it will be 45,000 into 5 rupees, 2,25,000. Now why will you want to incur 2,25,000 when you can just incur 50,000 rupees? It is better to incur a fixed cost of 50,000 guys instead of variable selling cost. Understood sir? So this is where beta I will not take variable selling cost on internal transfers guys, and I will not take variable selling cost beta on internal transfers as well as special order. We will be computing contribution per unit guys from internal transfers and special order without considering guys variable selling cost of 5 rupees. We would take that as a part of my fixed cost. Got it sir? All of you better copy this now. Decision regarding additional fixed cost. I hope you were all clear about this. Ab ye copy karo beta. So we have decided guys that we will be manufacturing 50,000 units, and you've also decided beta that we will incur a fixed cost of 50,000 selling cost instead of incurring variable selling cost of 5 rupees per unit. Now beta we will decide the best strategy for division A. We are not done with the entire question, guys. You've only taken few important decisions here. Yes, guys. Hope you're all done with this. I gave you a lot of time, guys. Now let us decide but as to what is the best strategy, guys. To decide what is the best strategy, beta, we will compute contribution per unit. We will compute contribution per unit, guys, and for division A. Remember, beta, division A has an option of selling it in the external market. They have an option of special order, guys. Now this special order, beta, is either accept in full or reject in full. And then, beta, there are internal transfers. Internal transfers, guys, of exactly 45,000 units or less than 45,000 units, because in both of them, beta, the transfer price is different. In both of them, guys, your transfer price is going to be different. Correct, sir? Yes. So our selling price per unit, guys, for case of external sales is 80 rupees. Intern special order as such, but at is 70 rupees. Internal transfers, if you transfer the entire 45,000 units, it is 75 rupees. Otherwise, it is 70 rupees. Your variable manufacturing cost, variable manufacturing cost, it is 55 rupees, guys. Does not matter whether it is export sale, internal sales, or special order, guys. Variable selling cost beta of 10 rupees will be incurred on external sales. Remaining beta, we've already decided that we will not incur a variable component. It is better to incur a fixed component. Understood, sir? Your contribution per unit beta is 80, 55, 25, 15. Here guys it is 20 rupees. Here guys it is, sorry, here it is 15 rupees. I'm so sorry beta. Here it is 20 rupees, here it is 15 rupees. So guys, by looking at all of this beta, it is very clear that the division A beta is going to give preference to internal transfers first. Yes or no? Division A beta will give preference to internal transfers. Will give preference beta to internal transfers. Internal transfers. Yes or no? It will transfer 45,000 units beta to division B. It will transfer 45,000 units to division B. Correct, sir. The balance 5,000 units as such guys, obviously better external sales. Balance 5,000 units better will be sold in external market. Will be sold in external market. Why not in special order, sir? Will be sold in external market. Remember guys, if you're transferring exactly 45,000 units to the other division, the question you transferring less than 45,000 units will not come. Special order beta has to be accepted in full. Special order beta has to be accepted in full guys. So that option is not there. So this is your best strategy guys. This is the best strategy beta. In case they want us to compute profits, we can. क्या पूछा वो? Show the profitability of that option. पूछा है ना बेटा. So we will show profitability as well guys. You guys can do this beta. We'll do profitability together. I hope you all understood this. I hope you all understood this, but I've clearly written guys as to what will be the best strategy for division A. What would be the best strategy guys for division A? Check करो बेटा. Yes guys, I hope you're all clear about this. Check करो guys. You can also compute profitability statement after this. You guys can compute profitability statement better. Chalo guys, let us compute profitability statement now. We will do it collectively better. Profitability statement, guys. Contribution better from internal transfers. We all know, guys, that we're going to get 45,000 units into 20 rupees contribution, that is 9 lakhs. And then better from external sales, it's going to be 5,000 units, 15 rupees. 9,75,000 beta is going to be a contribution. Fixed cost, we've written 5,30,000 beta, so this is your manufacturing fixed cost, and then beta there is selling fixed cost of 50,000 that we have agreed to incur. So this beta would be your profit. 9,75,000 minus 5,80,000. 3,95,000 will be the amount of profit. Clear sir? Clear sir. Check कर लो बेटा सब लोग फटाफट. There's one other bit beta here. There's another bit here, guys. You're not done with that yet. We will be doing that as well beta now. All of you guys do this properly. Do this properly, guys. Yes, beta. I hope you're all done with this. I hope you're all done with this, guys. If you're done with this, beta, do not forget they're also asking us to discuss. They are asking us beta to arrive at the amount of range of transfer price that they can negotiate, guys. Range of transfer price that can be negotiated, guys. ठीक है बेटा. So for that beta we will have to look at the second bit, guys. What is the range of transfer price, guys? Be under if the best strategy is chosen. If the best strategy is chosen, guys, that is, you do not want the best strategy to change, guys, will there be still scope for negotiations? Will there still be scope for negotiations? We all know, guys, that the best strategy that we have selected but is to transfer 45,000 units internally as such, guys, and transfer 5,000 units in the external market. Transfer 5,000 units but in the external market. If you do not want this strategy to change, beta, what is the range of negotiation possible between division A and division B? If this strategy as such beta should not change, what is the range of negotiation possible? After 20 beta, the next best contribution is 15 rupees per unit. After 20 beta, the next best contribution, guys, is 15 rupees per unit. Yes or no? If the contribution is 15 rupees per unit as such, guys, we can always arrive at the amount of range of negotiation here, guys. First thing beta, best strategy identified. So no beta, I'll tell you. Best strategy, guys, identified in 1. Best strategy beta identified in requirement 1, guys. The best strategy identified, guys, requirement 1 is क्या है बेटा यहाँ पे कुछ तो न्यूज़ आते जा रहा है बेटा taxation rebate and all of that. तो 45,000 units internal transfer beta and 5,000 units. 5,000 units beta would be external sales. External sales. Yes or no, guys? Now you will want, what is the requirement beta here is range of negotiation, guys. Range of negotiation. Range of negotiation as such beta without impacting the best strategy. What would be the range of negotiation as such beta without impacting the best strategy? Without impacting the best strategy. Yes or no? Yes, sir. Now what would be that range of negotiation as such beta? What would be that range of negotiation? We all know, guys, that the next best contribution per unit, guys, internal transfers are giving us a contribution of 20 rupees per unit, but the next best contribution beta is 15 rupees per unit. So even if we get 15 rupees per unit as such beta, we will be indifferent. Even if we get 15 rupees per unit, we will be indifferent, guys. Little more than 15 rupees, we know beta, we will give preference to internal transfers. Little more than 15 rupees, we will give preference to internal transfers. Yes or no? I hope you're all listening, guys, and you're not behind copying. Internal transfers beta are resulting in a contribution of 20 rupees per unit. Are resulting in a contribution of 20 rupees per unit. The next best contribution, beta. The next best contribution is 15 rupees per unit. 15 rupees per unit, guys. So even if internal transfers, beta, 45,000 units, even if internal transfers, please pay attention, guys. Even if internal transfers result in a contribution of 15 rupees per unit, result in a contribution of 15 rupees per unit, we can still transfer 45,000 units. We can still transfer, yes or no? We will be indifferent as such, beta, so we might transfer to division B only. We can still transfer 45,000 units, beta, to division B. So if you want, beta, so contribution 15 rupees, contribution per unit 15 rupees undalante, your minimum transfer price, beta, for your decision to not change would be variable cost plus, there is no fixed cost, beta. Fixed costs are not relevant. All of you know, beta, that you will incur that. 70 rupees per unit, beta, would be your minimum transfer price. And we also know, beta, that maximum transfer price as such, beta, would be the external procurement cost, beta, for division B. Will be the external procurement cost, beta, for division B. And that, beta, is 75 rupees. So you know, beta, now that the range of negotiation is such, guys. Range of negotiation. You do not want your best strategy to change, guys. Because you do not want your best strategy to change, even if internal transfers as such, but are giving us a contribution of 15 rupees, we would be indifferent. So that will give us a transfer price of 70 rupees and the maximum transfer price, beta, that we already know. The other division as such, guys, other division as such, beta, will not pay anything more than 75 rupees. Clear, sir? Yes, sir. So please make a note of this, guys. All of you guys, please make a note of this. Copy this, guys. All of you better copy this. Do this, guys, all of you. Let us finish question number 22. We will now start question number 23, but a similar question है. Yes, beta. Chalo, guys. I'm sure you're all done with this. Let us now proceed to the next question, guys. Question number 23, guys. Exact copy है बेटा question number 22 or 23. But question number 23 beta has many more complications as such, guys. So let us read that question, guys, properly. Actually, beta, question number 23 came in the examination. A simplified version of this as such, beta, became your ICI study material question. This 23rd one is an old syllabus question. That is, I've included that as well. AB Limited has two divisions, A and B, guys. One unit of A, guys, is an input. One unit of A beta is an input beta for one unit of B. B has a production capacity of 45,000 units and a ready market for 45,000 units in both the years 2010 and 11. Capacity of division A beta, this is in relation to division A, guys. Capacity of division A, guys, is 50,000 units in both the years. The maximum demand, guys, in the year 2010, external demand is 25,000, but in the year 2011 it is 30,000. Special order is 10,000, 15,000, guys. Fixed cost is 4 lakh 30. Variable manufacturing cost is 35. Variable selling price नहीं है बेटा, ये selling cost है. Variable selling cost for external sales or for special order, guys. For special order. Selling price beta, usual external market is 65 rupees. Selling price only special order as such beta is 55 rupees. यहाँ तक तो बेटा it is similar to the previous question. The only thing that we are seeing beta changes are that we have one more additional year, guys, and the price is 65 and 55 instead of 80 rupees, 70 rupees. B buys input A beta from outside at a slightly incomplete stage at 30 rupees per unit and incurs subcontracting charges at 20 rupees per unit. To complete it to a stage to match the output of division A. In 2011, the subcontracting charges will increase to 30 rupees per unit. So basically, guys, your external procurement cost for division B, guys, in the year 2010 is 30 plus 20, 50 rupees, whereas the external procurement cost beta in the year 2011 is 60 rupees. B is willing to pay A price it incurs, that is 50 and 60 per unit in 2010 and 11 respectively, provided A supplies B's full requirement. This is what we did in the previous question as well. For any lesser quantity, B will accept any quantity. B is willing to pay A only 45 and 55 rupees per unit in 2010 and 11. Assume no changes in inventory levels, but a production is equal to sales. In 2011, A may choose to avoid, point to be noted, my lord. In 2011, A may choose to avoid variable selling overhead of 5 rupees per unit on transfers to B or special order. That means beta that 5 rupees per unit, यहाँ पे तो beta he gave only for special order. But then we are incurring that beta even on internal transfers. We are incurring that beta even on internal transfers. He can choose to avoid that only in the year 2011 beta by incurring a cost of 50,000 per annum. Not for the year 2010. Not for the year 2010, guys. What will be the maximum profits of A under its best strategy in the year 2011? In view of company's overall interest, calculate the customer-wise units to be produced by A in 2010. Assuming that A follows its best strategy, between what values of transfer price will B be able to negotiate? First bit and third bit beta is a copy of the previous question. Second bit is a new bit. First and third bit beta is a copy of the previous question, and that is what is interesting, guys. That is what is interesting. We will be answering the second bit beta first, and then we will come to the first and third bit. Then we will come to the first and third bit. All right, sir. All of you better read the question. All of you guys read the question, guys. I will be waiting for 2 minutes. Guys, I hope you all read the question. Now let us talk, guys, for the year 2010. Let us talk better for the year 2010 first. The question is interesting, guys. The question is interesting, okay? Whatever we are doing, beta, is for the year 2010. For the year 2010. Yes, sir. Understood. One thing better is for the year 2010, guys, understand, is the decision from the viewpoint of the company or is the decision from the viewpoint of division A? Decision, guys, is from the viewpoint of company. From the viewpoint of company. The decision is such, beta, is from the viewpoint of company as such, guys. If the decision is from the viewpoint of the company as such, beta, consider maximum transfer price to decide the output guys, of the transferring division. Whenever beta the decision is from the viewpoint of company as such, guys, see, guys, decision is from the viewpoint of company and you have to decide the output, guys, of the transferring division. You have to decide the output. Decision beta, if the decision is regarding output, guys, we have been doing this beta in multiple questions. If the decision is regarding the output of transferring division, guys, consider maximum transfer price. Consider maximum transfer price. We did this in the previous two questions also, guys. We saw what was the maximum procurement cost for the other division and we took that beta for the purpose of decision making. If the decision beta is regarding output of receiving division, if the decision is regarding, we do not know beta as to what will be the output of the receiving division, usually beta it is the first case only. Usually it is the first case. You will consider minimum transfer price. You will consider minimum transfer price. Decision is regarding output of transferring division as such, guys. So you will have to consider maximum transfer price. If the decision beta is regarding output of the receiving division, you will have to consider minimum transfer price. You will have to consider the minimum transfer price. Understood, sir? No doubt about it. तो यहाँ पे बेटा irrespective of output level, irrespective of output transferred, guys, that is 45,000 units or less than 45,000 units. Most important point यही है बेटा, or less than 45,000 units. All of these questions better help us in understanding the concepts better, guys. That is why I've included this, so that you can clearly segregate or you clearly understand the difference between question number 21 and 22, guys. 22 and 23. इसके पहले भी बेटा हर एक question में I've been giving you that this decision is from the viewpoint of division. Had it been from the viewpoint of company, what would have been the impact? So irrespective of output transferred as such, guys, transfer price to be considered will be the procurement cost as such, beta, procurement cost for division B, that is 50 rupees beta in the year 2010. This is the first most important point, guys. I hope you're all listening. I hope you're all understanding. I'll write again beta, if the decision, all of this is only for our understanding, exam mein nahi likhna beta sab. If the decision is from the viewpoint of division A alone, consider the transfer prices quoted. Just as we did in the previous question, guys, or we will do for the year 2011. Consider the transfer price quoted, guys. So if it is 45,000 units entirely, beta, you will take 50 rupees. Less than 45,000 units, you will take 45 rupees. So that is what if the decision is from the viewpoint of division A alone. But then we are not taking decision from the viewpoint of division A alone, guys. We are taking decision from the viewpoint of division, from the viewpoint of the company. All of you write this, but the most important part of the question. That is why I'm answering the second bit better first. Then I will answer the first and third bit. Guys. You finish this better. Yes, guys, are you all done with this? Are you all done? Chalo guys, let us now understand better. We are done with this part. We know for sure guys that we're taking decision from the viewpoint of the company and not from the viewpoint of transferring division. Okay? Whenever decision beta, this is for the viewpoint of consider maximum transfer price. Whenever you're taking decision from the viewpoint of company, this is what you will do better. Irrespective of output transfer, you will take transfer price. If the decision was from the viewpoint of division A alone guys, you would have considered the transfer price quoted. Are we clear about this? ये याद रखना बेटा हमेशा, ये याद रखना बेटा हमेशा. Yes sir. Now guys, what are the contributions per unit that we are going to get? Another important note beta is that, another important note, variable selling overhead of 5 rupees, variable selling overhead beta of 5 rupees, variable selling overhead of 5 rupees is will be incurred will be incurred guys on both internal transfers, and special order, on both internal transfers and special order, in the year 2010 beta, do we have an option to avoid it? No. In the year 2010 we do not have an option of incurring fixed cost of 50,000. We do not have an option of incurring, we do not have an option of incurring 50,000 rupees fixed, to avoid incurring 5 per unit, to avoid incurring 5 rupees per unit. In the year 2010 beta, we do not have an option of incurring 50,000 guys, to avoid incurring 5 rupees per unit. I hope you're all clear about this guys. I hope you're all clear about this beta. Let me now compute contribution per unit. ये जो है beta, that was only for the year. We will decide beta as to what should be the optimum product mix guys of division A from the viewpoint of the company. There are external sales, there is special order, and then beta there are internal transfers. I do not have to segregate guys, I'll directly write beta up to 45,000 units. I do not have to segregate guys. When will I segregate beta less than 45,000 units and exactly 45,000 units? Only if the decision was from the viewpoint of division A alone. Only if the decision beta was from the viewpoint of division A alone. Look at the selling prices guys. The selling price guys in the year 2010 beta is 65 rupees, 65 rupees beta for external sales, 55 for special order. Internal transfers beta, we all know it is 50 rupees per unit. Less beta variable cost. Manufacturing cost is 35 rupees guys. And then beta your variable selling overheads. Variable selling overheads as such guys, it is 10 rupees bet on external sales, 5 rupees on special order and internal transfers. Now look at the amount of contribution per unit that you're making guys. 45, 20 rupees, 40, 15 rupees, and then guys 15, right? Yes sir. Here beta 50, 35 and 5 guys 10 rupees. 10 rupees as such guys. If you look at the ranking as such beta, ranking is external sales first, second special order, third internal transfers guys, third internal transfers. Understood sir? Do not forget guys, external sales beta maximum demand कितना है बेटा external sales में, ठीक है वो नीचे लिख लेंगे. I hope you're all clear about this beta. We will be using this for the purpose of determining our optimum product mix. Yes sir. Write this guys, all of you write this beta. Variable selling overhead का भी point लिखो guys सब लोग. Variable selling overhead and then contribution per unit. Yes, beta. I hope you're all doing this. I hope you're all doing this. Please write, guys. All of you better write this. Yes, beta. I hope you're all done with this. ठीक है. हाँ sir, हो गया. Now guys, like the previous question beta, here one thing is that we do not have a problem of deciding whether we'll have to incur variable selling overhead or not for the year 2010. That problem is sorted, guys, because we do not have an option. And but then there's still one more decision to make beta, is whether you will want to increase the production capacity or not, guys. Whether you will want to increase production capacity or not. Please understand, guys. Please understand beta. The minimum contribution per unit. The minimum contribution per unit beta is 10 rupees. Yes or no? The minimum contribution per, I will summarize everything better towards the end. I will tell you that what is the range of transfer prices, what should be the transfer price to be considered for the purpose of decision making when you're deciding output level of a particular division, guys, if it is receiving division, if it is transferring division, and what is that you are supposed to do, guys, with respect to conflict settlements and everything. Don't worry. The minimum contribution per unit is 10 rupees per unit, guys. So the additional contribution, from every 10,000 units, the additional contribution beta from every 10,000 units, minimum additional contribution beta. I am not telling you that this is the case. Minimum additional contribution from every 10,000 units beta will be 10,000 into 10 beta, 1 lakh rupees. 1 lakh rupees. Yes or no? Yes, sir. And what is the amount of fixed cost? यहाँ पे beta fixed cost is increasing by 1 lakh, guys, and not by 50,000 rupees, unlike the previous question. And fixed cost is increasing beta. Fixed cost is increasing by 1 lakh. So you will see beta that you for every 10,000 units. For every 10,000 units. So guys, beyond a particular point as such beta, there might not be any incremental benefit. There might not be any incremental benefit as such, guys. So if the capacity is, say guys, 30,000 units, if the capacity is 30,000 units, or if you increase the capacity beta to 40,000 units, or if you increase the capacity as such beta to 50,000 units, listen carefully, guys, listen carefully beta. What is that you're going to do beta? Your external sales are going to remain at 25,000 units. Do not forget beta, this is 2010. External sales beta will be given preference 25,000 units. Alternative 1 में बेटा ये जो है capacity 30,000 units में और एक alternative है मैं जो बोलूँगा last में, tension मत लो. I obviously cannot accept the special order as such, guys. Special order can be accepted, guys, only if you have to meet. Remember, guys, it is to be accepted in full or rejected in full. So यहाँ पे special order तो आएगा नहीं बेटा. So if special order cannot come as such, guys, here special order can come, here special order can come beta. The balance as such, guys, will be internal transfers. The balance beta would be internal transfers, guys. Special order is to be accepted in full or rejected in full beta. So this here, guys, I'll transfer internally. No, guys, 5,000, 15,000, guys, 15,000 units. समझ में आ रहा है? हाँ सर. If I talk about their contribution as such beta, if I talk about their contribution, ऊपर जो भी है beta, I can just multiply. External sales. Please pay attention, guys. I will give you chance to copy. I will give you time to copy, guys. I am not rushing anywhere. At 20 rupees beta, special order at 15 rupees, and internal transfers at 10 rupees. It's a very nice question, guys. That's why I've included it. 5 lakhs, 1,50,000. I'm just multiplying the above units, whatever I wrote, with the contribution per units, guys. With the contribution per unit. Understood, sir? Your total contribution is going to be 5.5 lakhs, 57 lakhs, and here, guys, 8 lakhs. You talk about fixed costs, beta. Here it is going to be 4 lakh 30. Here it is increasing by 1 lakh. Here it is increasing by another 1 lakh. The amount of profit as such beta here is 1.2 lakhs. Here it is 1.7 lakhs, 1.7 lakhs. So the company can operate either at a capacity level of 40,000 units or division A beta. We are indifferent. Division A can operate preferably 50,000 units, guys. Either at a capacity level of, this is from the viewpoint of company, guys, capacity level of 40,000 units or 50,000 units. 40,000 or 50,000 units, preferably 50,000 units. Preferably 50,000 units. Manufacture more, guys, and transfer more. Preferably 50,000 units. Understood, sir? All of us understood this, sir? One more thing, beta, is note, if capacity is limited, if capacity, guys, if capacity is limited to 30,000 units, there is another alternative. There is another alternative. ये ज़रूरत नहीं है बेटा, मैं फिर भी लिखा रहा हूँ alternative, because we know that we are not even operating at 30,000 units, and that is beta external sales, because we know beta that external sales 20,000 units and special order 10,000. Special order 10,000, guys. My contribution beta would be from external sales, guys, I'm going to get a contribution of 20 rupees per unit, whereas from special orders, guys, I'm going to get a contribution of 15 rupees. Correct? Yes, sir. 5.5 lakhs, and the fixed cost as such beta would remain at 4 lakh 30, profit 1 lakh 20. Same profit as above. Same profit beta as above. This is another alternative. But anyways, beta, this is the answer. So you know, beta, what is the best from the viewpoint of division, from the company's viewpoint as such, guys. I repeat again, I did not consider a transfer price of 45 rupees for transfers of less than 45,000 units, because the decision is from the viewpoint of the company and not decision from the viewpoint of division A. For the second and third, for the first and third bit, we are going to do that. Now, guys, it is your job to copy all of this. I have already explained about minimum contribution as such, beta. Please do all of this. Copy, guys. While you copy, beta, please try to understand. While you copy, beta, please try to understand all of this again. Yes, guys. All of you better copy this, and then we will do the first and the third bit. We are done with the second bit, guys. We first performed calculations for the second bit. Yes, guys. Please check, guys. Here, better contribution. Are you all done with this, guys? So, guys, I hope you're all done with this. I hope you're all done with this, beta. Let us now answer it for the year 2011, guys. If you read the requirement, beta, for the year 2011, the decision is not from the viewpoint of the decision, guys, for the year 2011, beta, is not from the viewpoint. Kahan gaya re question? 23rd. It is not from the viewpoint of the company, guys. It is maximum profits of A, beta, under its best strategy in 2011. Under its best strategy, guys, in 2011. So it is decision, beta, from the viewpoint of division A, guys, 2011. Decision, beta, is from the viewpoint of division A. From the viewpoint of division A, guys. So when the decision is from the viewpoint of division A as such, guys, we will have to consider the transfer prices quoted. We will have to consider the transfer prices quoted. What are the transfer prices quoted, guys? For transfer of 45,000 units, guys, you will consider a transfer price of 60 rupees. For transfer less than 45,000 units, we would consider 55 rupees. We would be considering 55. First, most important, we did this, but as a part of the previous question, you do not have to wait for me, guys. You can finish off the entire question. You can just pause the video, guys, finish off the entire question, and then verify better whether the answers are correct or not. Okay, always do that as such, guys. So, guys, here better decision is from the viewpoint of division A, guys. Consider the transfer prices quoted. Next, guys, is please understand, guys, that we can avoid incurring selling overhead of 5 rupees per unit as such, guys. We can avoid incurring a selling overhead of 5 rupees per unit, guys, by incurring a fixed cost of 50,000. Guys. Now, if capacity is increased to 50,000 units, if capacity is increased to 50,000 units, if capacity is increased to 50,000 units, guys, external demand is 30,000 units. Correct, sir? Correct. The minimum quantity, guys. I'm not telling you, guys. Minimum quantity, guys, related to internal transfers, guys, and special order. The minimum quantity as such, beta, related to this internal transfers and special order, guys, will be 20,000 units. Now, instead of incurring a variable cost of, we wrote this in the previous question as well, guys. Instead of incurring a variable selling overhead of 5 rupees per unit, guys. 5 rupees per unit, guys. Instead of incurring a variable selling overhead of 5 rupees per unit, in that, if you incur variable selling overhead of 5 rupees per unit, beta, your variable selling overheads would be 20,000 units into 5 rupees, 1 lakh rupees. We can incur fixed selling overheads of 50,000 rupees. So instead of incurring that variable selling overheads, guys, of 5 rupees per unit, you can always incur this. This is better if you guys, decide to increase the production capacity. But if you take a fixed selling overhead of this, better, please understand that your variable cost is same. Selling price, internal transfer sub. 1 second, better. On one more important point, guys, that I will want to write: contribution per unit. The decision is only from the viewpoint of division A, guys. Let us not forget that. I'm repeatedly telling you. Internal transfers. No, guys. Special order. Internal transfers, guys, for 45,000 units or less than 45,000 units. The selling price as such, guys, in case of external sales. But as 65 rupees. Special order 55. In case I transfer the entire 45,000 units, I'll get 60, or else I'll get 55. Less variable cost, beta. Our manufacturing cost is 35 rupees. And our selling cost as such beta, variable cost, selling cost as such beta is 10 rupees for external sales. Special order beta, I can avoid that in case I'm operating at 50,000 units. Yes or no? In case I'm operating at 50,000 units, I can avoid incurring that, guys. So this would give me 20 rupees. This would give me 20. This would give me 25. This would give me 20 rupees. Please understand, guys. Please understand. ठीक है, ranking में तो बेटा you'll give preference to that. First important thing बेटा is, even if variable selling overhead is incurred, even if variable selling overhead is incurred, or 5 rupees is incurred, the minimum contribution per unit, I am not telling you beta we will incur that. The minimum contribution per unit beta will be 15 rupees. Will be 15 rupees. These two are interrelated decisions, guys. Now will be 15 rupees as such, guys. Ha ya na? Ha sir. So the minimum additional contribution, guys, minimum additional contribution, even if you get 15 rupees, even if you get 15 rupees as such beta, what will be your minimum additional contribution from 10,000 units? So our minimum additional contribution from 10,000 units is going to be 10,000 into 15, 1,50,000. Yes or no, sir? Even if I guys incur variables, I'm not telling you I will incur variable selling overheads. Even if I incur variable selling overhead of 5 rupees, my minimum contribution will be 15 rupees. And the additional fixed cost beta, additional fixed cost for every 10,000 units, for every 10,000 units as such beta is 1 lakh. Therefore beta we will increase capacity, we will increase capacity beta to 50,000 units. We will increase capacity, guys, to 50,000 units. Are you all clear about this? Yes sir, we are all clear about this. तो ये है बेटा पहले का information. Now बेटा we can, based on this we can decide बेटा as to what shall be the amount of transfers. Okay, all of you बेटा can copy this. So we have so guys here basically बेटा the objective of writing all of this बेटा was to first decide what should be the order of allocation, guys. Should I give preference to external sales or should I give preference to internal transfers? Also guys, to decide whether you will incur variable selling overhead or not. We have eliminated that problem. We are not going to incur variable selling overhead. Also guys, will you increase your capacity? Yes boss, we will increase our capacity to 50,000 units. Problem solved. Now we can answer all of the questions, guys, easily. Copy करो बेटा ये अगर नहीं हुआ है तो. If you're already done with it बेटा, great. All of you better do this. Write this, guys. होप you're all done with this. ये हो गया ना सबका कैपेसिटी का पॉइंट? हाँ सर, राइट दिस गाइस एंड I hope you're all doing it better. Chalo guys, let us now present the best scenario as such beta. So obviously beta division A will give preference to division A beta will give preference to internal transfers. That itself is the decision from the viewpoint of the company as well beta. They should be doing that. Will give preference to internal transfers beta. That is 45,000 units. 45,000 units. And the balance 5,000 units beta. The balance 5,000 units will be sold in external market. Will be sold in external market. We can compute profitability better here. सब लोग साथ में कर सकते हो बेटा. This is normal guys now. In order to arrive at profits guys here for division A beta from internal transfers, you will have 45,000 units. 45,000 units multiplied by 25 rupees. 45,000 units guys multiplied by 25 rupees. Yes or no? Yes sir. 11,25,000. And from external sales it would be 5,000 units multiplied by 20 rupees, and that beta is another 1 lakh rupees. Put together guys, that is 12,25,000. This is the amount of their contribution guys. Do not forget beta that we have to incur a fixed cost guys. That manufacturing fixed cost is 6 lakhs 30 beta. It is increasing by 1 lakh 1 lakh. And yes beta, and you're selling overhead guys, that you've decided to incur a fixed cost of 50,000. So that will be 6 lakhs 80. This would be 5 lakh 45,000. This beta would be the profit of division A. Simple guys. See guys, once you do the previous question, and this bit beta would be very simple. This bit beta would be very simple. We still have to do the third bit guys now. You copy karo. We will do the third bit guys after this. Finish this beta and then we will do the third bit. I'll wait for a minute beta here. When I काम करो बेटा, pause करके copy कर लो. pause करके copy कर लो guys. You can always pause and copy this. Yes or no? Yes sir. So that we just wind it up guys. Anyways हो ही गया है class. Third bit beta, I hope you paused it and copied it guys. Third bit guys, it says, assuming that A follows its best strategy, between what values of transfer price beta will B be able to negotiate with A, so that A's best strategy is unchanged in the year 2011. Now you want the range of negotiation guys without third bit guys. You want range of negotiation guys in the year 2011. In the year 2011, without impacting the best strategy, without impacting the best strategy guys, the best strategy guys identified in requirement 1. ठीक है. Do not forget beta that the next best contribution per unit, the next best contribution per unit beta is 20 rupees. That is after internal transfers beta, the next best contribution per unit beta is 20 rupees. Yes or no? Yes sir. So even if internal transfers beta result in a contribution of 20 rupees per unit, even if internal transfers beta result in a contribution of 20 rupees per unit, we can transfer to division B. Yes or no? Yes. So at a contribution of 20 rupees per unit beta, what will be your minimum transfer price? Minimum transfer price as such guys would be your variable cost plus contribution. Variable cost is 35 guys, and plus 20. This would be 55 rupees guys. Maximum transfer price, do not forget beta, maximum transfer price is the external procurement cost. Beta for division B. And that beta is 60 rupees. So this becomes your range of negotiation guys. Therefore beta, your range of negotiation, Ludlow basically, would be beta between 55 to 60. You kill each other beta, whatever it is, and you decide whether you want to do it or not. ठीक है? Yes sir, pretty much okay. So guys, that's the end of this question guys. I hope you've copied the previous one as such. We will be winding up the session here guys. In the next session guys, I will finish off question number 19, 20 and 21 beta first, and then we will proceed to conflict resolving transfer pricing system. We have something called as two-part transfer pricing system and dual rate transfer pricing system. We will do both of them guys so that we can answer the remaining questions. Done sir, no problem, understood everything. Chalo guys, and that's it. Copy this guys, and then I'll see you guys in the next class. Hope you've understood everything guys. In case you have doubts, I'll repeatedly telling you better, please do not guys hesitate to reach out to me as such guys on Telegram. You already have my ID, I'm there. You can be a part of the group. You can post your doubts better in the group, or you can also guys ask your doubts on a via personal message on Telegram guys. Okay, so copy this guys. I'll see you guys in some time. I'll see you guys in the next class beta. Sometime matlab I'm recording some other class beta after this. So yes, I'm not going to see you guys, but I'm going to see some other guys. Anyways beta, bye bye guys. Keep studying, keep revising guys.